of business. Our business editor, Kate Moody, joins us now. Kate, tomorrow, Tuesday, marks the official end of the lockdown period here in France. No bars or restaurants for the time being, though. And, the economy minister today suggesting that they might not be open for still quite some time to come.
Yeah, Tom, the hospitality industry has been eyeing January 20th. That's when the government initially indicated that it thought that restaurants and cafes would be allowed to open again. But of course, the pandemic here in France is far from under control. And this morning, Bruno Le Maire told France Info Radio that that date is not set in stone. It will depend entirely on the health situation in the country. If the relaxing of restrictions that we're about to start for the Christmas holidays leads to another spike in infections, restaurants are likely to remain closed for some time to come. Le Maire saying that the industry will continue to have access to state-backed furlough payments for its workers, as well as payroll tax breaks, financial compensation, and loans to help them get by. Many in the industry, though, say that's simply not enough. Representatives of the hospitality and tourism industry were protesting in central Paris today. They say that they're just simply not being given enough visibility to plan their future. Unions say that up to a quarter of French restaurants could go under despite this ongoing government support.
Okay, and meanwhile, France's central bank warning that the economy isn't going to rebound quite as fast as some people had perhaps hoped it would.
Yeah, bad news for restaurant owners, among others, here coming from the central bank. The level of economic activity in France is unlikely to reach its pre-pandemic levels until mid-2022 at the very earliest. France's central bank says this second lockdown will see GDP shrink around 8% in December alone and 9% for the year of 2020 as a whole. The economy then expected to rebound around 5% next year, but that's not as strong as the 7.4% boost that had been predicted just a few months ago. And that's because the central bank says the impact of the vaccines that are being rolled out really won't be felt here in France until at least the end of next year. The bank also expecting unemployment in France to peak at around 11% in the first quarter of 2021. Now, these latest forecasts are broadly in line with predictions from the French government and other organizations like the OECD. But one of the things the bank's top governor has been pointing out as well is that the government really needs to keep an eye on its debt. It's set to hit 120% of GDP this year because of the emergency support and stimulus measures. The bank's governor is saying that it's necessary to protect businesses and households, but it is going to come at a cost. The state's going to have to start paying back some of that money that it's raised and borrowed in recent months as early as 2022, when the full effects of that pandemic may not yet have disappeared.
Okay, and just lastly, the Brexit trade talks extended once again. Not quite sure how many deadlines have been extended up until this point. I've lost track. But what are the currency markets making of all of that, Kate?
Well, the currency markets, a bit like us, a bit lost by these ongoing deadlines that keep coming and going. But this extension of those talks did give a real boost to the British pound today. Currency markets, we know, are still pricing in some sort of a last-minute deal, even if it winds up being a bit of a fudge, perhaps. Sterling is trading just above $1.33, still just under €1.10. And remember, this is a real barometer of investor concern about the UK's future relationship with the European Union. Last week, the pound dropped nearly 2% against the dollar as leaders warned that the chances of a no deal were rising. So very, very jittery here as we wait for more news from Brussels. We do know that if for some reason there is no deal, if everything is abandoned, if talks are called off, we could expect to see the pound plunge as we have in the past when we get what the markets see as bad news when it comes to a possible Brexit trade deal. So like the rest of us, watching very, very closely all those developments in Brussels this evening.
Okay, thank you very much indeed for that update. Our business editor, Kate Moody, thank you so much.